Live from the Tech Girl Financial Studio.
Oh, I love the enthusiasm.
What will you do when your money works for you? Welcome to the Tech Girl Financial Podcast with your hosts, Victor and Kim Gaxiola. From the home office in California, here is Victor and Kim.
So today's podcast is actually going to focus on one very specific area, an area that I know Kim really loves. And it's actually based on a blog post that she recently wrote and shared called Why Now May Be the Best Time to Sell Your Restricted Stock Unit. So Kim, go. Why do you love RSUs?
I love them because it's a bonus. And like any bonus, it's not something you should count on, but it is a great way to help you build wealth over the long run.
Oh, and validation. We hear a little ding, so they agree with you, which is awesome.
I guess that was the right answer, right?
Well, yeah, it is the right answer, so kudos to you. Well, here in Silicon Valley, we're fortunate to work for a lot of different companies that have technology, and people get to continue to work. Even in the pandemic, people still are working and operating and, doing their jobs from home. And the thing is that the tech stocks have been somewhat resilient to the market and are likely to be the ones that are going to help us through this recovery because of the innovation and all that. So those of you that are fortunate enough to have gotten RSUs and those have vested, a lot of times this is where the fear and greed sets in, doesn't it, Kim? Where people are sitting there thinking, oh, do I hold on to this? Do I hold on to this and sell it once that stock price goes through the roof? Or, as you like to say, maybe they should consider selling it as soon as it becomes vested. So expand on that.
Right. So, and let's take this a step back to say that I do believe you should sell that stock on the day you vest, because most of you are vesting over a period of time, 4 years, 5 years, or whatever it is, and are over time compensated with more vested stock, which is subject to another vesting schedule. And so chances are you are accumulating more stock over time. And when your company stock vests, you still have other unvested shares that you will reap the benefits when the price of the stock comes back.
Plus, there's the danger, isn't there, Kim, of holding on way too much of one specific stock. We call those concentrated positions. So you suggest in the blog post that it'd be great for a person to vest, to go ahead and exercise, sell that vested stock, and then diversify so that they minimize the risk of overexposure. Right.
And the thing is that we have to remember that it's not a guarantee that your company stock is going to go back to the price it was in January or February. And even if it does go back to that price, it may not happen for another year, 2 years, 5 years. I mean, I saw company stocks from 1999, 2000 take 15 years to come back. And these were tech companies. And so, number one, it's not a guarantee that it's going to come back. It's not a guarantee that it's going to happen in 6 months or 12 months either. And so it's really painful to think that you paid taxes on this at, let's just call it $250. And now the stock is worth $200 a share, and you're thinking, no way can I sell it now because I paid taxes on it at $250, and now I'm really taking it a hit.
Yeah. But could the loss be a good thing?
Yes. So I'd say take the loss. This whole pandemic is like a punch in the face. It's not a cancer. It like is a quick pain. Take that loss as a quick pain and then move forward. And so, yes, you sell it. You have a loss in your portfolio, which you can use to offset future gains. And so at this point in time, you sell the vested shares and diversify. Now you own a much less aggressive portfolio. And in the future, when those stocks do go up in price, you can use those losses from your loss you took in your company stock
from the punch in the face.
Right, that's the punch in the face, right? You can use that. It's a lesson to offset future gains.
Well, we were recently reminded that everybody has a plan until they're punched in the face. I think it was Mike Tyson that said that.
That's
right?
great. That's so true. But you know, use it as a way. Nobody likes to take a loss, but at the same time, sometimes that's the easiest way to get somebody to make a change in their portfolio, and better to sell stocks at a loss and have no tax consequence, and then diversify into a better looking portfolio than to diversify when you have all these gains in your hand and you're going to have to pay taxes on it.
I just love how you took a punch in the face and made it a good thing.
Right? I'm still going to avoid a punch in the face, but especially from Mike Tyson.
And Kim, how would you address that employee that, well, you know, they kind of hesitate on selling the stock because they feel, well, if I sell it, does this mean I'm disloyal? Does this mean I don't appreciate my company or my job or the people? I mean, is this a vote of no confidence? You know, so how do you talk to people about that?
Right. And there are a lot of people out there that really do enjoy where they work. You know, we've been using a lot of Zoom conference calls, and I know the employees there, I watch them on LinkedIn. They have such a strong culture and they're all about their company. And so it may be difficult to sell shares when you have this good feeling about your company. And what I would say to you is that has nothing to do with the situation. Never let your heart make decisions where they should be made with your mind.
Yeah, well, I'm guilty of that. And not so much on vested stock as much as it is with sports betting back in my day. You used to, you know, you back your teams and you're going with your heart, but your head knows better. So, yeah, you don't want to find yourself in a situation where you let your emotions take over.
Right. And I think that happens a lot. You know, unfortunately, we were not able to have March Madness this year, but you and I both know that we would love to be rooting for UCLA to make it to the final dance, right? And but we don't usually put them in our picks because oftentimes it's not going to happen.
Yeah, we know better.
And I'm so sorry to say that because I am a very, loyal Bruin.
Yeah,
but you know what? I don't bet with my pocketbook.
Uh-huh.
I root for them. I wear the clothes. I have great UCLA tennis shoes, but I am not going to put my money on that. And so it's the same thing when it comes to your company stock. You may love them. You may think you're going to have a great career with them, and that's all great. But having not just your career in the hands of a company, but also a large portion of your personal wealth is a huge risk. Mm-hmm. And, you know, look around. There are other companies that are doing well out there besides yours.
And I guess that's where I wanted to go next, which is in asking the question, all right, if you've convinced someone that says, you know what, I love my company, but you're right, I am going to get other RSUs down the road, and I've got a good chunk of them now. If I sell, where should I be putting that money?
And that's what we help a lot of our clients with. Oh, gosh, there's so many things that we can recommend for you. And even in this pandemic, there's a lot of exciting innovation happening out there. There are companies that are creating so much disruption. And so, you know, even now as we take this step back and we look, okay, the market pulled back from the high about 30%. And if you look at the S&P index, you can see that it's come back to about a midway point. But if you look at the NASDAQ, which has a lot more technology heavy and more innovative companies, we can see that there's a difference now created some of the more general S&P large corporate 500 companies are not innovating at the same pace as some of those NASDAQ companies. And it's starting to show in the indices. And so you want to think that, there are going to be some companies that do better than others. And even if your company is one that's reaching higher highs, it's still very risky to have it all in one stock.
Well, one thing that you talk about, which I really enjoyed, and I've heard you say this before, but that is the no drama stocks. So what do you mean by no drama stocks?
So it's so funny. I love to have this conversation with clients because it really is an education story. And the story that I like to say about no drama stocks is there are a lot of companies that people are really surprised when I pull up their 1 year, 5 year, 10-year performance and compare it to the FANG stocks, Facebook, Apple, Amazon, Netflix, and Google. Like there are other companies, and I'll put them chart to chart, compare some of those companies. And over a 5 to 10 year period, there's a lot of comparable companies that are not in the media that, CNBC isn't talking about daily, nor is Fox, nor is SNBC. And I love those companies because if they're not reported in the media that often, chances are they're not subject to as much volatility because, people love to follow it. There's a herd mentality out there. They hear, Amazon is going up, and they buy it. And, I'm one to tell you, I think it's too late to buy Amazon.
That's true. Well, as you pointed out in the blog post, fear does seem to keep media in business. They're going to lead where it bleeds. And of course, they're trying to scare people because that brings up ratings and viewership and such. But one thing that I know that you're really big on, and this is something that our clients really appreciate, is transparency, which has to do with the fact that they can actually know what they own and see it, as you say. So tell us a little bit about how you structure these portfolios to ensure that people have accounts with names that they may recognize and feel that sense of transparency.
Yes. So here I think we are fortunate working in Silicon Valley, and people do have a lot of ownership in their company stock. And so they're used to looking at a company stock in comparison to owning just one mutual fund or several mutual funds. And so I think they get more excited because they can see a drastic change in the value of their company stock versus a mutual fund that, it's kind of like the turtle or the hare, right?
That's right.
A mutual fund may be more the turtle and their company stock may be more the hare. But over the long term, sometimes the turtle wins the race because the hare just gets burnt out, right?
That's right.
So that's something to think about when you are investing in different companies. And but going back to the whole idea of transparency, if you know what it's like to own one company, then you own a bunch of companies and you see what's going on. I have always said that, in times like we are in right now, and in 2008, 2009, people didn't have a whole lot of understanding of everything that was going on in the economy. They just felt it was all bad. However, if you are holding on to a stock like Costco, and you see the lines at Costco currently, you feel comfortable that it's going to be here. Despite whatever crazy things go on in the economy over the next couple of years, you feel comfortable that Costco will still be there in 5 years and in 10 years. And so that transparency of knowing what you own and feeling good about those company stocks is so important in a time like right now.
To say nothing of the fact that right now there's a lot of great quality stocks, companies that are selling at a discount, that have no debt or very little debt, lots of cash reserves, and a business proposition that people are still going to need. I mean, people will still need to travel. people still will need to get together. People will still need to buy groceries and a bunch of other household staples. So there are lots of opportunities out there. So if you're someone that works in the tech industry, and we are Tech Girl Financial, with restricted stock units, we want to let you know we're here to help you diversify that high risk and that highly concentrated company stock portfolio. So Kim, what would be the best next step for someone who really wants to have that conversation?
Is just to have a conversation with us. We don't bite. We're not intimidating. That's one of the reasons why I love these podcasts is I hope that more people will hear us and feel like they can relate to us. And, just have that initial conversation with us to see what it is that they're looking to do and how we can help you. One thing I know is there are a lot of people that take pride in doing things on their own. And in this pandemic, we're seeing how much we really do need each other for personal human connection. And so, that is the same thing with our business is that if you really want to do this right, the personal human connection is so important because even though there are a lot of great discounts out there right now in the stock market because of the pullback, there's a lot of junk out there that won't make it out of this too. And so you need to have a professional that is doing the research and can come up with the right solutions for you. They're not always obvious.
That's true. So if you are interested, what we do make available is that you can contact our team. We'll include a link in the show notes that will allow you to schedule, if you want, a 15-minute kind of no obligation conversation. We can learn a lot from each other in 15 minutes to see if there's any way that we might be able to help out. You can also call our office at 800-584-3652, and we leave all our contact information also on the show notes.
Or you can also email me at kim@techgirlfinancial.com.
So, quick podcast, just wanted to talk about RSUs and strategies and things to consider. We are here for you. We are Tech Girl Financial, and we hope you'll reach out.
That's right. We hope to hear from you soon.
Okay, thank you very much.
If you have questions, comments, or suggestions for future shows, please send an email to victor@techgirlfinancial.com or join the conversation on Twitter using the hashtag AskTGF. We also encourage you to follow us on the Tech Girl Financial page on Facebook and connect with us on LinkedIn.
Securities offered through registered representatives of Cambridge Investment Research, Inc., a broker-dealer member FINRA, SIPC. Investment advisory services offered through Cambridge Investment Research Advisors, a registered investment advisor. Tech Girl Financial and Cambridge Investment Research, Inc. are not affiliated companies.